So we see another crash with the SPY and the QQQ testing their most important support levels again. And what's more interesting, we see these support levels actually holding up prices today, which only reinforces, underlines the importance of keeping an eye on the market's main turning points, which we have been monitoring very closely for quite some time now here on this channel. So let us understand what is happening right here, right now, always keeping an eye on the facts and the technical evidence, because this is the Finance Hydra channel where I share technical views of the market without sensationalism, without causing panic or euphoria, because here we only work on strategies. My name is Nathan. Welcome to another daily analysis. Now, as we can see here, the SPY is really trying to react above a crystal clear support level made by the 586, the previous top level, now multiple support levels since November 6. What's more, this key point is the possible neckline. It is the possible neckline of a possible head and shoulders chart pattern. Why do I say possible? Because this pattern wasn't triggered yet. Maybe SPY will never trigger it, by the way, because we are still above the neckline at 586, which is the most important inflection point for the SPY, medium term speaking. Only by losing 586 we could trigger a sharper correction ahead. In this case, our first technical target would be the 576, closing this open gap over here from November 6. Now, if you ask me, by triggering this head and shoulders, we could easily seek its next technical target, which is the size of the head, the distance between the top of the head and the neckline projected in the direction of the breakout of this neckline, suggesting a pullback to the $563, which, by the way, is its next technical support level on the weekly chart, because it was a previous top level multiple times in July and in August and September as well. Alright, so the 563, 564 is going to be our next technical target if we actually trigger this head and shoulders chart pattern. What's more, the SPY will also automatically lose the 21-week EMA, the exponential moving average on the weekly chart, suggesting that yes, we're gonna see a sharper correction ahead. Alright, so for now, let's pay attention to the 586, because as long as we stay above 586, the bullish bias could still persist. We are still bullish on the weekly chart, and we are on the verge of reacting above a crystal clear support level on the daily chart. Therefore, we are not bearish yet, so we gotta be very careful, because only by triggering this head and shoulders, meaning only by missing the 586 and closing below 586 on the daily chart, we are gonna actually trigger this technical bearish reversal chart structure. Alright, since we are still above this key point, okay, it is not necessarily bearish yet. It is not insanely bullish on the daily chart, yes, I agree, because we are still below the 21-day EMA. However, we are not bearish, technically bearish yet. Alright, we are just losing momentum, making what seems to be a sideways correction now. It all depends on how it is going to react over here above, again, 586, our most important support level. Alright, as long as you stay above it, the bullish bias still could still persist. Alright, now regarding the QQQ, the situation is a little bit more delicate because it is clearly losing momentum as well. We lost two important support levels, namely the 21-day EMA and this purple trend line over here, which was connecting the previous bottom levels since August this year. What is the QQQ's most important support level right now? $515, okay? If we lose the 515 again, then alright, we are gonna possibly trigger a bearish pivot point, a lower high, lower low, because guys, remember, uptrends are made of higher highs, higher lows, all right? This is what we have seen on the QQQ and on the SPY as well for the past months, all right? We see a crystal clear uptrend. If we see a lower high followed by a lower low, we see a technical bearish reversal chart structure suggesting a sharper correction on the weekly chart, which by the way is still bullish, all right? In the worst case scenario, we could retest the support line of this ascending channel again, all right? And we would still technically maintain the bullish bias on the weekly chart, but we could see a very sharp correction in many tech stocks because we are talking about the QQQ, okay? A drop of 5% over here represents a lot for many stocks, including Tesla, Palantir, etc. So it is going to be a very dangerous situation. Therefore, medium term speaking, 515 is our most important support level. If we see a bullish reaction above this key point, fantastic, we're gonna maintain the uptrend. Many other stocks will maintain their bullish bias as well, their bullish outlook. However, right here, right now, we gotta be very careful because if we see the QQQ losing the support level, we could see a very problematic situation for tech stocks for the next few weeks or maybe even months. All right, so it all depends on how we are going to react over here over the next few days above the 515. Again, 515 is our most important support level. If we see bullish reaction, great. If we don't, more correction ahead. All right, and how this is going to affect our stocks like Nvidia, like Tesla, AMD, etc. Well, regarding Nvidia, we see Nvidia incredibly resilient today, right? Because while the broad market is correcting, look at this heat map over here. The vast majority of stocks are crashing very sharply. We see Tesla minus 3%, Broadcom 2.5%, Apple more than 1%. So the vast majority of our stocks, of the S&P stocks over here are incredibly bearish. Now we see Nvidia going up today 0.72%. The moment I'm recording this video, the market is gonna close in 2 minutes right now. So right here we see a bullish reaction. However, we gotta be very careful because although it is a bullish reaction, we failed in closing above Friday's high, materializing a meaningful bullish candlestick structure on the daily chart. What's more, we did a new low. Today's low is lower than Friday's low, so it is not an incredibly meaningful bullish reaction, but we gotta be very careful, alright? I did recommend buying Nvidia to the 5% project's members over here around this bottom level, alright? When Nvidia was here, I did recommend buying, but right now it is showing some weakness. If we see a crystal clear bearish reaction suggesting a meaningful reversal, medium term speaking, we should exit our positions, book profits very quickly, take small profits, right? And this is it. Because if we see Nvidia collapsing, we also see the shadow of a head and shoulders chart pattern on the daily chart, all right? Suggesting that yes, we could drop to lower levels, maybe retesting the $115 again. Long-term speaking, as a long-term investor, I don't see a reason for us to panic over here because we could see a sharper correction and that would be fine, that would be okay. Maybe another opportunity to buy more Nvidia shares, but so far we gotta be very careful, especially because on the weekly chart, we see the 21 weekly moving average very close to the neckline of this head and shoulders chart pattern on the daily chart as well, making the 130s area a double support level in 2 different time frames. And that's how you do a multiple time frame analysis properly, right? You use technical key points, you use technical evidence, technical support levels to reinforce your reading. Now, if you ask me, okay, so far it is worth to maintain the bullish bias, but if we see Nvidia collapsing tomorrow or maybe in the next few days, losing today's low again, all right, it is gonna be probably an excuse for us to take profits very quickly, small profits very quickly, and this is it. All right, and of course, if you want to join the 5% project, know that it is our educational project where I teach you how to trade properly, how to use technical signals, how to use support resistance levels in your favor to enhance your chances of success in trading. And of course, I don't only teach you guys the theory, because we learn in practice every single day. Every single day I share many trading ideas, many strategies with you guys on our channel. Our signals have crystal clear entry point, exit points, stop loss, targets, etc., always detailed to you, so you can understand how the logic works, how our methodology works, and then you apply this in practice every single day. All right, the Finance Hydra channel has the 5% project, which is here for you. You can join for free for 7 days, so you have absolutely nothing to lose. See if it is for you. You can check our performance on our website. The link is in this video's description. All right, just take a look. It is free to try. See for yourself if you like it or not, and then, and only then, maybe you will consider joining us forever. All right, there I teach you guys every single detail regarding how to trade properly. So the link to my website is in this video's description. All right, are we good? Now, Nvidia is reacting well. It is quite resilient, but we gotta be very careful. Now, Tesla. On the other hand, we see Tesla looking extremely weak right now. We are on the verge of losing our most important support level made by the 414, which is a very clear support level for us, right? By the moment we saw this breakout on December 11, I have been telling you guys, now the 414, which was the previous all-time high from November 2021, is now going to act as a future support level for us. Well, it is acting as a support level since December 12. 1, 2, 3, 4, 5, 6 times right now. It is our most important support level. What's more, the 21-day EMA is very close to the 414, making this area a double support level for us on the daily chart. If we lose this key point, we're gonna actually reject the support level, triggering a sharper correction, possibly to the $358 again, the next support level seen on the daily chart. What's more, it would also trigger a bearish pivot point, a lower high, lower low, because guys, so far Tesla has been making higher highs, higher lows, right? If we see a lower high, lower low, the pattern, the bullish pattern will break, and then we're gonna see a technical reversal. In addition to all of this, on the weekly chart, we see a shooting star candlestick pattern above the 414. By triggering this shooting star, by closing below its low, which is automatically below the 414 as well, we could see this top signal getting triggered, suggesting a sharper correction ahead. In this scenario, we could easily correct to the 21 weekly moving average, all right? But I still would work with the $358 first as an intermediate target, all right, as a medium-term target for us. Either way, we see multiple technical evidence suggesting that the 414 is our most important support level. We are still above it, all right, so the bullish bias is still intact. However, if we lose it, we can expect more correction ahead, maybe even an opportunity to short. So we gotta pay attention to this key point over here from now on. And remember, if you want to have access to my trading signals, the 5% project is there for you. All right, and the AMD is one of the stocks that I have on my personal radar because it is looking very good. All right, I know it is still very bearish. It is below the 21-day EMA. It is still losing, making lower highs, lower lows, losing its support levels. All right, we don't see higher highs, higher lows, but if we see a reaction from here, we could see not only the first higher high, higher low since October this year, but we would see AMD breaking the 21-day EMA, making a bullish reaction on the weekly chart. Last week, we saw a bullish Harami candlestick pattern, which, by the way, if triggered, could easily trigger another long-term bounce over here on the weekly chart back to its next resistance levels like the 21 weekly moving average or maybe even to the 144 again. We have an open gap over here around 137, and again, remember, gaps work as magnets for the price when the trend reverses. Therefore, we could easily work with a target, with a humble target around 144. I'm not even counting on a closure of these gaps over here above the price around 159 and around 174. No, I'm just saying that if we see a bounce, we could easily close this gap and retest the 144 again. However, we gotta see a better reaction from here, a more decent reaction from here in order to actually trigger a meaningful bullish reversal chart structure. I'm keeping my eye on this because it could be a very promising stock in the future. So yes, my dear friends, the 5% project is looking for a trade on AMD, another trade on AMD, because we trade AMD quite often, all right? So yeah, we could see another meaningful opportunity in the next few days or maybe in the next few weeks. Now, Palantir, this one made a crystal clear top signal over here, a false breakout of this resistance line. Now, if you ask me, we are making a pullback to the 21-day EMA. In the worst case scenario, we could lose the moving average and retest the $71 again. And this is it. But Nathan, what if we lose the $71 again? If we lose this key point, then alright, we are going to technically reverse the medium-term trend, suggesting a sharper correction on the weekly chart, making a top signal on the weekly chart. We see the 21 weekly moving average as our next technical support level around $57. We can use Fibonacci as well to set more support levels. We see the first one, the 38.2 around $68. We see the 50% around $62. And of course, we see the 61.8% retracement around $57, which only reinforces the idea that $57 is going to be a critical support level for Palantir. If we see, by the way, in my humble opinion, if we see Palantir dropping to the $57 again, retesting the weekly moving average, retesting the 61.8% Fibonacci's retracement, making this area a double support level, long-term speaking, it is going to be a fantastic opportunity to buy again. All right, because you are buying near a support level. Guys, remember, always buy near support levels. Sell near resistance levels, buy near support levels, because if you buy far away from our support levels, your risk reward ratio is not going to be good, and you can't complain if you see a harmless pullback to our next support level. So this is why I always tell you guys, when we analyze especially high beta stocks like Palantir, like Tesla, like Nvidia, if we see the price far away from our support levels, okay, let's wait for the price to retest our support levels again, so we can understand, so we can simply analyze the situation calmly. All right, when we are near support level, if we see a buy signal, fantastic, we're gonna buy it, because if you buy near a support level, the risk reward ratio is always at its peak. All right, because if you lose money, all right, you're gonna lose a little money. If you make some money, all right, your target is far away from the current price, your wins will outweigh your losses. And this is very important. This is the most important thing of all right? We gotta make our wins more than our losses. We gotta make our wins to outweigh our losses, because long-term speaking, this is how you achieve consistency. All right, are we clear over here? You gotta achieve your consistency. It is not one single trade that it is gonna make your life. We are not here to make money today or this week or even this month. We are here to make money consistently over the years, over the next years, all right? So we gotta always work with patience, not trying to get rich very quickly in one single trade. This rarely happens, all right? And I hate counting on luck on this. Therefore, I prefer to make my own luck using good risk management. This is how we do over here. All right, trading is incredible, is one of the most scalable things you can ever do in your life, but so far we gotta wait for our stocks to react properly near their support levels, like IWM, which is trying to react around its support level, the 217. By reacting above the support level, by actually confirming a bottom signal around the support level, fantastic. IWM may trigger another buying opportunity over here, suggesting a bullish reversal because we could see a possible double bottom chart pattern. All right, so by seeing this double bottom chart pattern, we could see IWM recovering to much higher levels. In this case, buying near the support level will make a lot of sense. But today's reaction is not good enough. We gotta see a better, meaningful reaction, maybe tomorrow, maybe in the next few days, so we can buy IWM again, all right? We did a fantastic trade over here in November. The 5% project did a fantastic trade over here, and recently we took a loss on this one. All right, it did hit our stop loss. Guys, again, no one is 100% accurate. We at the 5% project, we have an accuracy of almost 70%, which is quite good considering that for every single dollar we risk, we make $2.09 roughly for every single one of our wins. All right, so this is how you achieve consistency. It takes a lot of time, but it is possible. So that's totally fine, all right? IWM is giving us a very rough time right now, but if we see a meaningful bullish reaction again near the support level, we could see another technical opportunity to buy again with a good risk-reward ratio. Now, if we see IWM losing the 217, it is over, all right? We're gonna trigger a bearish pivot point, and in this case, we would seek much lower levels. It is not going to be a buying opportunity again. ARM Holdings, this one is also on my personal radar, all right? I'm looking at ARM Holdings very closely, but so far, it has yet to trigger a crystal clear buy signal, at least for me, all right? So far, there is nothing that could convince me that ARM Holdings is going to react, it is going to form a bottom signal over here and then recover and seek higher levels. No, there is no technical evidence suggesting that this scenario is going to materialize, but we see ARM Holdings around a crystal clear support level. If we see a bullish reaction, fantastic. If we don't, all right, it is not going to be a buy. And this one over here is quite interesting because I see some of you guys asking about this stock. And guys, I don't know how to pronounce this name, all right? I think it is Rigetti, right? Like spaghetti, but it is Rigetti. Rigetti, we see today it is going down 0.47%. However, every single candlestick over here is quite dramatic. Yesterday, I know it seems like a small candle, but yesterday we went up 10%. I'm so sorry, yesterday, Friday, we went up 10%. Thursday, we went up 36%. Guys, a stock like this, if you put all your money in a stock like this, it is going to make you quite stressed, all right? It is not the kind of stock you buy a lot, all right, and then you see, and then you speculate with this stock. No. If you ask me, I always recommend buying a small position in a very volatile stock like this one, because you could easily see this stock dropping like here, minus 30% on December 19 in one single day. So position size tells a lot here, especially in a stock like this, all right? This is what I always tell you guys: risk management, position size, these things are even more important than the technique per se. You gotta use you gotta use TA in conjunction with these tools in order to trade well, because if you don't, well, you can learn all the technique, you can understand all the patterns, it is not gonna mean a thing, all right? Because in one single day, you can see a drop of 30%. Therefore, you gotta be very careful. If you ask me, we could see pullback to the moving average, which is quite dramatic as well, because even a harmless pullback to the moving average represents a drop of 44%. And that's crazy. So, if you're out of this one, I recommend always buying near a support level. It is the classic recommendation, right? Buy near support level. Are we near a support level? I'm so sorry. Are we near a support level right here, right now? No, we are not. So, okay, it is not necessarily a buy again. However, if we see Rigetti actually correcting and reacting above its 21-day EMA, it is going to be fantastic. Maybe it is going to be an incredible buying opportunity, but right now, the risk-reward ratio is not making too much sense. Maybe if you use a smaller time frame, then alright, you can set a stop loss near the $14 and this is it, alright? Call it a day, buy, set a stop loss near $14 and this is it. However, long-term speaking and the medium-term speaking, I don't see a crystal clear buying opportunity yet. All right, but maybe we will see one. If you want, I can keep an eye on this one for you guys. And this is why you should subscribe to this channel, because I'm here every single day watching SPY, QQQ, Tesla, Nvidia. You are watching this video for nearly 27 minutes, my dear friend. That's a lot. Therefore, it is a good time. It is a very good time to ask you, consider subscribing, because this channel is for you. Thank you very much for your audience, my dear friends. See you guys tomorrow. Stay safe. Bye-bye.